I know it's late there, so we really appreciate you staying up to talk with us. You went out the door in August with the IPO with a list price of $15. You're now trading in the US on the ADR at 39. The stock has more than doubled. Do these numbers justify that share price performance?
Well, I think, as a company, we do not really operate based on where the stock price is. We certainly really happy that, our shareholder has, received good value and the stock has performed well. But we have not really been operating the company because the stock market prices. But, what we can say is that generally in the last few months, we have seen a significant pickup in terms of momentum in the Chinese EV market, and players like XPENG and others who are really focused on smart EV products are getting the benefit of that. And I think that's one of the reasons that catalyzing this movement in stock price for the sector.
Brian, there is a lot of competition, and obviously Tesla's one of them, but a homegrown EV car competitor is NIO. How did you achieve manufacturing profits so quickly versus NIO? I mean, what are you doing that's so different, particularly because you offer your vehicles at a lower price point than NIO?
Yeah, I think obviously this quarter we achieved gross profit for the first time as a company. I think it attributed to a number of factors. First of all, we have a better product mix. Our newly launched P7 sedan is a high margin product. It's selling very well. We actually have delivered over 6,000 vehicles in the third quarter compared to just a few hundred when we started delivering in the second quarter. Secondly, is that overall, I think given the volume increase of our vehicles, our production costs and labor costs actually has been reduced because efficiency gains, because of volume and economy of scale. And also continued cost down on materials will also contribute to the gross profit this time.
Brian, Tesla is, though, lowering the car that competes with your P7, the price of the car that competes with the P7. How problematic do you think that's going to be with that Chinese-produced Tesla?
Well, I think Tesla is certainly a very worthy, competitor for the Chinese EV players, including XPENG. Their Model 3 is selling very well in China, particularly after domestically made Model 3 lower their prices. But I think the phenomenon actually turbocharged this market development for EV. As a smart EV for that matter, because more and more gas engine, sort of drivers are now switching to smart EV because I think the education provided by Tesla and the other players. So I think in terms of competition, definitely, we, welcome better products to be available in China. And we certainly think our product, P7, has certain advantages over competition because its smart features locally developed. But overall, I think the better product in China will overall catalyze the conversion from gas engine vehicle market to EV market much more quickly.
That's definitely what most car makers say about Tesla, the diplomatic line. But at the end of the day, you still have to sell cars. You still have to make the cars. So can you sustain these profits if you're dealing with a cheaper Model 3 and you still have to deliver two new models over the next 2 years?
Well, I think we are already living in the environment where Tesla has lowered their prices and then seen the effect of the Tesla lower the prices. In October, actually, when Tesla announced the price cut in the beginning of October, I think there's only I would think short period of pressure that we felt in the sales front. But then I think we quickly absorbed it, and now we look back. October as actually record month for sales, and November seems to be a month that's going to beat October. So I think we haven't really been constrained because the Tesla competition. I think overall market growth is very exciting here.
Alex talks about you making cars and being a car maker. If you were a car maker, you would not have the valuations that you have at the moment. You're an EV car maker, but even then you probably wouldn't have the valuations that you have at the moment. Do you think, like Tesla, that you are valued as something differently? Do you have aspirations, like Tesla does, to be an energy company, a broader company than simply a car company?
Well, I agree with you. If you are simply an automobile company, I think that valuation matrix is very different. What we believe that in the long run, the differentiation is actually the smartification, the autonomous driving, the cockpit experience inside the vehicle that has the smart features that's truly differentiating. Even I think for electric vehicle, electrification will not be the core differentiation in the long run. I think also with the smartification features like autonomous driving, like the interaction you have in the car, you can actually find a lot of ways you can actually monetize differently from current automobiles because you are directly interacting with your customers. You have a lot of data from the road, from the driving, that you can actually find scenarios that you can actually create monetization strategies that's different from traditional auto. And in the long run, I think if you have the ability to provide differentiated, smart, autonomous driving features, you may be able to actually get into the operating side of the business that's truly changing mobility services in the long run. So those are exciting things that smart EV players can do compared to traditional automobile companies.
So what does getting into the operating side of the business mean? Because like Tesla, in essence, is going to become a battery storage company at the end of the day. So what is the operating opportunity then?
Well, I think there's a number of ways you can think about operating opportunity. For example, if a vehicle can truly be, autonomous, then obviously you disrupt the mobility, operations quite dramatically because the largest cost component is the driver cost for, mobility and ride sharing. Secondly, is that if you actually have, the smart cockpit design and an operating system that truly provides integrated experience, then you can think about ways to monetize that experience through comfort, entertainment, productivity, and other ways. So those are things that I think are truly a smart EV company can think of because the integration of software and hardware.
When do you think you're going to be fully profitable, Brian?
Well, I think, obviously we're still a young company. We're growing fast, but I think we're growing from a small base. So I think it will require us to hit a certain volume before we actually can think about profitability. I think, for us, probably getting to, 150 to 200,000 vehicles annually production will be the scale that we needed to achieve profitability.
And when's that going to be?
I think that will probably be in a few years' time.
Wow, awesome. Great news from Bloomberg. Hello, my name is Brian, and I would like to welcome you back to the channel. Hey, that is some great news about XPENG, and I don't know if you guys have paid attention today, but XPENG has been taken off. And here's a design of the new vehicle, and man, this thing looks awesome, doesn't it? Great looking vehicle. All right, let me see. Yeah, so here's the article that came out today. First automaker to implement LiDAR technology in 2021 production models. XPENG, a leading Chinese smart electric vehicle company, today announced its next generation autonomous driving architecture at Auto Guanghao 2020. I mean, the G is salad in H. I don't know if it's salad in Chinese. I'm not sure. XPENG has significantly upgraded its autonomous driving software and hardware systems for 2021 production lines. The company has become the first car manufacturer to adopt LiDAR, laser for image detection and ranging, as a new hardware component for its next generation autonomous driving architecture, significantly improving the vehicle's high precision object recognition performance. Great stuff. See here. And as we can see, the stock has really been taken off today. All right, up $7 today. Wow. All right, so the stock has been performing well. As you can see, it's way above the 20 moving average. Now, that's a little scary because normally after huge run-ups, the stock will actually come back down to the 20 moving average. So we'll wait and see what happens. But so we'll see. The MACD has a strong uptrend. So we're gonna monitor it. I'm actually purchased a call option on it after I saw the news. So my call option is performing quite well. I think I'm going to wait for a possible pullback to hopefully buy some shares, and I'm going to try to hold some shares long term on this company. All right. But I mean, it's a lot of great news. But again, you know, this is a speculative play, and a lot of your big hedge funds, a lot of big companies don't like getting into companies that are having negative net incomes, zero cash flow. All right. So you may have a few index funds that will add it to their portfolio, you know, a small percentage for speculative plays. But for the most part, you saw the video. I think the company has a bright future ahead of itself. All right, again, this is still a very, very new company. It has some advanced technology, right? The first to the market with that technology. Now that doesn't mean other companies can't come in and use that technology at some point. You know, I would like to see when Ford and Toyota and especially Honda, you know, when they're going to come out with some electric vehicles. So we'll see. It's definitely a huge demand for electric vehicles in the future. And so these companies are the first they're first out of the gate. Okay, they're first out of the gate. And a lot of times what will happen, especially when a company has negative cash flow, you know, the big boys, you know, the Hondas or the Toyota, you know, they may come in, Nissan, they may come and buy these companies out. Okay. All right. So we got to really be on the lookout for that, especially when a company start creating positive return and they're selling 40, 50, 100,000 vehicles a year, you know, and if these big companies see the potential for an acquisition, they may try to make an attempt to acquire some of these smaller EV companies. All right. So again, keep that on your watch list. If you want to buy a few shares, try to wait for a pullback. Hopefully there is one. There's always a pullback somewhere, right? All right. My name is Brian. Again, if this is your first time checking me out, make sure you hit the like, subscribe button, and come on back for more wealth building information. Peace.